Hey Iguana investors, welcome back to another essential episode of Iggy's Financial Report Deep Dive. Today, we're exploring Parkway Life REIT's first half 2025 results, which investors all across Singapore have been talking about. With the market debating whether Parkway Life is still worth that famous premium, I'm here to break it all down, slide by slide, and help you decide if it deserves a spot at the core of your portfolio. Now, for those of you who are new here, I'm Iggy from the Investing Iguana. We're ranked number 8 in the 24 Influential Tigers by Tiger Brokers, just crossed the 1 million reads mark, and have hit 58,000 likes. We've produced over 1,000 videos and racked up more than 600,000 watch hours as of August 2025. Beyond just quarterly numbers, my mission is to make complex financials useful and actionable for your Singapore investing journey. Let's set the stage for Parkway Life's results by walking through each of the most important slides from their business update. I want you to really see how the story builds from the numbers to strategy to what it all means for your money. We start with the headline results. Distributable income grew nearly 10% year on year, landing at 49.9 million Singapore dollars. Even after raising new capital and issuing more units in late 2024 to fund recent acquisitions, Parkway Life still managed to grow its distribution per unit by 1.5%, now up to 7.65 cents. Gearing was well managed, coming down to 35.4%. Debt costs are low, just 1.5%. And most importantly, they do not face any major debt refinancing risks until after September 2026. Financial discipline and strong cash flows. That's Parkway Life's first big story. Let's move into the numbers engine with Parkway Life's consolidated statement. Revenue rose 8%, reaching $78.3 million. What's behind this? The answer is simple. New nursing homes acquired in Japan and France in 2024, and the benefit of contractual rent step-ups for their key Singapore hospital assets. Their net property income grows in tandem, keeping margins healthy. Now, finance costs did jump almost a quarter year on year. This comes from new loans to fund acquisitions and weaker Japanese yen translation, but here's the magic. Parkway Life uses sophisticated hedging and allocation so that these finance costs don't bite into the distributable income that unit holders care about. Exchange rate losses this period were mostly offset by that hedging program, which stretches all the way to 2030. This kind of smart defensive financial engineering is what keeps Parkway Life's DPU so steady, and that's a big comfort for Singaporean income investors. Now let's check out Parkway Life's balance sheet muscle. Their investment property portfolio grew to $2.52 billion. Net asset value per unit ticked up as well, but what's really got the market chattering is the 68% premium to book value. The closing share price at $4.10 is a huge gap over the underlying NAV, but this just doesn't happen unless the investing community sees you as a fortress. Parkway Life's cash reserves grew sharply, up to $49 million. That means they have the dry powder to pounce if competitors run into trouble. Borrowings increased modestly, reflecting new Japan and France deals and some currency impact. For CPF investors, this kind of balance sheet means you can hold Parkway Life through almost any storm. Now let's talk about Parkway Life's track record, straight from the DPU slide. Since its IPO in 2007, Parkway Life's distribution per unit has never dropped. Not once. Through all the financial storms of the past 18 years, Parkway Life has given investors a bigger paycheck every year. The latest half-year figure, 7.65 cents, puts them on track for another record payout in 2025. This is the definition of a bond proxy in the REIT world. Healthy, growing yields that you can count on when you plan for retirement or CPF payouts. And now, the slide that makes wealth creation real. Parkway Life's long-term performance. Since its listing, the REIT has generated a 386% total return. That is the result of consistent DPU growth and strong share price performance, even during volatility. In the first half of 2025, Parkway Life outpaced almost all of the S-REIT index, a sign that institutions like Temasek and the big local pension funds see this as their foundational REIT holding. If you put your money in Parkway Life and leave it to compound, the numbers speak for themselves. On to the heart of Parkway Life's real advantage, its portfolio. As of now, Parkway Life owns 75 prime healthcare properties, lets them to 35 different operators, and boasts a weighted average lease expiry of nearly 15 years. More than 90% of their rent is contractually prevented from dropping. Occupancy is perfect, 100%. Diversification is strong. About 60% of income is from Singapore, 32% from Japan, and 8% from France. This mix reduces country risk and positions Parkway Life to earn wherever healthcare demand keeps rising. Getting more granular, let's look at the lease and tenant profile. Parkway Life's lease expiry schedule is ironclad. Not more than 3% of contracts expire in any year till 2029. That gives cash flow security you very rarely see in listed real estate. Their biggest anchor, Parkway Hospitals Singapore, is majority owned by IHH Healthcare, a blue-chip giant with over $18 billion in market value. Their big French operator, Domus, is Europe's third largest elder care company, with more than 100,000 end users. In Japan, the REIT's exposure is spread across 30 operators, meaning no single local event can spoil the party. For investors, this is as close as you get to many eggs in many baskets as possible. Now let me slow down for a crucial slide. Parkway Life owns 3 major Singapore private hospitals under a 20.4-year master lease. These leases run all the way to December 2042 and feature fixed 3% annual rent increases until 2025. After that, rents track CPI plus 1%, so you're getting reliable escalations, even if inflation rises. All property costs, think taxes, insurance, repairs, are covered by the tenants, not Parkway Life. And uniquely, Parkway Life has first dibs if the prized Mount Elizabeth Novena Hospital ever comes up for sale. For the local market, there are almost no other landlords with this combination of long lease, inflation protection, and unbeatable tenants. For the Japan portfolio, Parkway Life really leans into the silver economy. Japan's over 65 population now makes up nearly a third of its citizens. The country's need for nursing homes will only grow. Parkway Life's assets there are brilliantly hedged. Leases have up-only rent reviews, and over 96% of the portfolio is protected from rent reductions. On top of that, security deposits and backup operator agreements shield the REIT's income even if a tenant runs into trouble. Their average lease term in Japan is over 10 years, a rarity. Macro projections show home healthcare demand growing more than 8% a year through 2033. So Parkway Life's Japan portfolio is set to benefit from both demography and policy. France marks Parkway Life's new European beachhead. Their deals there follow the same playbook. Secure 11 freehold nursing homes, all leased on 12-year terms to Domus, a titan in the elder care space. Each lease is inflation-linked, locking in rent growth even if the euro wobbles. These are not speculative bets. France's healthcare property market is forecast to top 1 billion euros this year, and Parkway Life's careful expansion gives them first-mover advantage with high barriers to entry. Lastly, Parkway Life's debt profile shows why they're consistently resilient. With nearly all interest rates fixed until late decade and a staggered maturity schedule, Parkway Life avoids the common REIT trap of a debt wall that needs to be refinanced all at once. Their interest exposure is almost completely hedged, and all major overseas borrowing is currency matched to avoid nasty surprises if the yen or euro move. This kind of financial discipline is the unsung hero of Parkway Life's consistent performance. For even more granular data, extended financial breakdowns, and side-by-side peer analysis, don't forget to check out our premium post at the Iguana Substack. That link is in the description, and it covers Parkway Life's strategic details, their hedging mechanics, and what's happening beneath the surface in their European and Japanese portfolios. So after all this, what's my final take? Parkway Life's premium to book, currently 68% over NAV, is not a fluke. It is institutional investors voting for the only S-REIT with such a blend of long inflation-protected leases, consistent DPU growth, and blue-chip anchors. For the average Singaporean investor, especially via CPF or SRS, this is your perfect core REIT. The yield may not be spectacular, but the safety and performance record absolutely are. Hold if you own it, accumulate if the price dips below $3.80, and only sell if you're seriously rebalancing for risk or yield elsewhere. The one risk to watch is a seismic collapse in Japan's yen or a major default by IHH or Domus VE. But these are remote, high-profile events, not day-to-day threats. Parkway Life is built for defensive wealth. If you care about low-drama, high-security compounding, this continues to be the SGX's healthcare king. That's especially true if you're thinking about retirement, family CPF, or any wealth building that values stability over fast but risky wins. Now let's wrap up. We've torn down Parkway Life REIT's 1H 2025 results slide by slide with every strength and risk laid bare. If you find this analysis useful, leave your thoughts and questions in the comments, especially on what stocks or sectors you want me to cover next. Like, share, and subscribe so you never miss a new breakdown crafted just for Singapore investors. Don't forget, our premium members get exclusive early access to all our videos, often a full week before they're public. That means you get my urgent insights, follow-on analyses, and market calls delivered right to your inbox, giving you a lead on the crowd. It's just $3 a month, less than a copy from Yakin. If you want that key edge, click the link in the description to level up to premium today. If you enjoyed this episode, your next stop should be my detailed deep dive comparing Parkway Life and First REIT, where we look at different income strategies for the Singapore healthcare REIT market. This is Iggy reminding you, the best returns come from understanding, not just hoping. Invest smart, keep your portfolio healthy, and stay ahead of the herd.